What is going on, crypto peeps? Happy Tuesday, actually. We just came back from a long weekend, at least here in the US. I know it was a long weekend in the UK as well as maybe some other countries. So happy Tuesday to you. If you follow me on the Discord, I was saying that there is a possibility that we would see a rebound on Tuesday. Not a certainty, but a possibility that we'd see a rebound on Tuesday, because what we tend to see on the weekends is people are too exhausted or too occupied to care about crypto en masse. And Monday, since Monday was a holiday, what we've seen in the past as well with 3-day weekends is that trend extends over to the Monday or the Friday of the long weekend. So in this case, we were expecting a possible rebound today. However, we will analyze two possible scenarios. Is this a bull trap, or are we on the cusp of a true reversal? Now, if you've seen a video that I did last week at some point, I was saying how to identify a bull trap. I will link that somewhere in the description, or actually I'll annotate it. I'll add it as a card in the video. But basically, the easiest way to identify whether something is a bull trap or not is to look at the volume and the historic volume and measure that against, previous rallies, and see in relation whether we are really on the cusp of a reversal, or whether it is just a tenuous movement in price that will not stick. So let us take a look at the charts real quick. And today we do have a special guest, Crypto Joker. He will be joining us for the rest of the proceedings this evening or this morning. So let us get right into it. So this is the weekly chart for Bitcoin. I drew this possible reverse head and shoulders a week or two ago. Actually, it was more like 2 weeks ago now. I drew this possible reverse head and shoulders because it looked like it was a possible pattern that was forming. Now, a reverse head and shoulders is a bullish pattern. That does not mean that this bullish pattern cannot break down. And it all comes back to the volume. Look at this abysmal volume here that has been declining really since March. Now, I'm going to go into a scenario in which this declining volume can actually be a bullish factor or be a factor in a bullish trend. But this is the declining volume that we have recently. And what we see with bullish trends, bullish trend patterns, is when they do form, if they are not backed by volume, they break down very easily, whether we're talking about a cup and handle, a rounding bottom, reverse head and shoulders, double bottom, triple bottom. We do see those break down often without volume. So in order for this reverse head and shoulders pattern to play out, let's leave volume aside for a second. We do need this right shoulder. We do need prices to move up in order for this right shoulder to close at the neckline, and this right here being the neckline. So here is the bullish scenario, is that the bears are exhausted, right? You see this, let me actually just circle it for you. You see this tall red volume bar here, these tall red volume bars here, this tall red volume bar here, the couple here, and you see that they're either hitting this volume moving average, which is a 20-period moving average, this orange line that comes default with the volume indicator on TradingView. So you see that it either hits this line or surpasses this line most of the time, these tall red volume bars, right? And these are indications of sell-offs because they coincide with these red candlesticks, right? Which is a bearish candlestick. So you can identify these as sell-offs, even though people mistake these, right? And they think that all of this volume means sell volume. No, it's basically total volume, but the color coincides with the candle. And so you can surmise based off of this, you can come to an educated conclusion that these are mostly sell-offs because the price did decline heavily on that candle. Again, remember, we are on the weekly chart. So you see sell-offs, 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 and these bars are credible because of the amount of volume. Again, look how far above this moving average, this volume moving average we are. Now we get to this point, and yes, we do see 3 red candlesticks in a row, 3 red weekly candlesticks in a row, and this one for this week is starting off green. However, look at the volume, right? The volume is abysmal. There really isn't enough. It indicates that there isn't enough to sell, or that the bears are exhausted. So And typically before rallies, we do see periods of abysmally low volume or abnormally low volume before you do see a rally, right? Because there's been so many sell-offs previously, and there really isn't enough supply of Bitcoin to sell, or the bears are exhausted. For a rally to happen, you'll start to see green volume push these prices up. So in order for a real rally to happen, we do need green volume at least close to this moving average or above it, right? In order to match the activity that was going on here. Now, of course, the other scenario, right? The bearish scenario is that this could be a bear trap. And a bear trap, again, is just a false signal of a reversal to an upward trend, from a downward to an upward trend. This could be a bear trap. And the way we would know that is, again, by volume. So if we keep monitoring the volume, and we'll take a look at the daily chart in a second, but if you keep monitoring the volume and the volume is not coinciding with this rally, then you'll see it break down really quick. We could continue to decline further. And again, for this reverse head and shoulders to play out, we could fall just below 6,900 and this pattern will still be valid. Now, the market doesn't have to acquiesce to your demands or your patterns. So this could very well turn out not to be a reverse head and shoulders pattern. This is just something that we posited based off of the price movement and price discovery that was occurring over the last few weeks. But in order for the reverse head and shoulders pattern to be valid, we could get to 6,800 and bounce back up. Or we could, if it isn't a reverse head and shoulders pattern, we could totally break down the support line and keep declining. Now, I'm not one, if you know this channel and you know me, I'm not one for these hysterical, catastrophic predictions where Bitcoin hits 4,000 or 3,000. I would much rather continue to monitor the market, set your active support and resistance levels and see what happens from there. I'm not one for this dystopian future where Bitcoin is now worth 10 cents again. I mean, a lot of people do that for clicks on YouTube, but that's not really my game. So let's move over to the one-day chart to get a different perspective. So looking at the volume, again, this is what we were saying, the bears are exhausted. You're not really seeing a healthy amount of sell volume, even the way that we saw back here. So look where we've hit these bottoms in the past. Look at the sell volume here. Look at the sell volume here. Look at this sell volume here, right? We are at the moving average, the volume, the 20 period volume moving average, or well above that in these previous sell-offs. We don't see that here. We do see the decline. Again, price can move without volume, but is it more likely to stick without the volume? And the answer is no. We need volume in order for prices to sustain, whether those prices are at the bottom or at the top. We need volume in order for those prices to sustain. Now, one thing that we see that some of you may not know about, especially some of you beginners may not know about, is the divergence between the oscillators, right? The oscillator indicators being the RSI and the stochastic in this case, and the price. So you do see that the price made a higher low, right? You see that here. The oscillators, both the RSI and the stochastic in this case, sometimes it's one, sometimes it's both, made a lower low. And what that signifies is a hidden bullish divergence, right? So this is a bullish signal. And this is really good to see here, especially with the RSI now curling up, the stochastic now curling up. You do see the histogram on the MACD, these bars right here, these red bars. You do see the bars getting shorter, which is an indication that the MACD might then converge and the blue, the 12, go above the 26 and rally upwards. In terms of the long contracts versus short contracts, you do see that there are more longs in comparison to shorts, in proportion to shorts at the moment. In terms of the fib, we are now between the 0.618 and 0.786 fib levels. This is usually traditionally a buy zone. However, being that the price in my estimation or in my analysis, the price of BTC is in a no trade zone at the current moment. It's in limbo. Between 7,200 and 7,500, that really means nothing to us based off of previous support and resistance levels, right? I would not re-enter a position currently if I do not have any BTC or if I'm wanting to swing trade BTC at the moment, right? So what I'm looking at again is the volume. Now, looking at the one-day scenario, a lot of you have pointed out, a possible triple bottom. with this bottom here happening in the beginning of February, right, where we hit around 6,900. We have the bottom here where we hit around 6,800, right? This entire, let me just draw it out for you so it's clearer, but this entire bottom right here, and then a possible bottom that we have currently. So the immediate bearish scenario is that we might continue to fall in order to complete this triple bottom. Now, again, the market doesn't have to acquiesce to your patterns. Just because you want to see a triple bottom doesn't mean the market will confirm a triple bottom for you. Also, what's wrong with a double bottom? I mean, I know triple bottom is a stronger confirmation of a possible uptrend, but a double bottom is also a bullish trend, in which case, you know, this broke down because we continued to decline. So if we do end up seeing a triple bottom, right, where the current prices fall to the 6,900 level, then we could see a bullish run thereafter. Either way, I think from my perspective that the signals today, as of today, are more bullish than bearish, because we do see the exhausted bears. We do see the divergence between the price and these two oscillators. We do see the oscillators curling up. We do see the histogram on the MACD, the bars getting shorter as time moves on. But we do need some more green volume in order to sustain this rally. So today, you know, we do have a few hours left on the candle. We have, what do we have? About 6-7 hours left on today's candle. Before today's candle close in UTC time. So I would like to see more of this volume kick into at least the moving average, this 20 period moving average on the volume or above, and continue that for a few days in order to see a rally. The next level up for me is 78.50, around 78.50. If we can get there and close above it, and we have the volume to back it up, then we could see a rally. Otherwise, we might hit a further bottom of around 68 or 6,900. Again, the market doesn't have to stay there just because we want it to, but those are the previous levels that we've identified. So we use those as indicators. Now, on the immediate bullish side, we could continue to rally without even hitting this triple bottom. And that would also, if we continue to rally past, this is around 98, 9,900. Obviously it goes down. The neckline goes down as time moves forward, but we could continue to rally and get to this bullish scenario where we have the reverse head and shoulders on the weekly chart. So that is the immediate bullish scenario without declining further and rather rallying from today's prices forward. Looking at the volume real quick, if you look at this rally that we had towards the mid to end of April, and you compare that or contrast that with the volume that we're doing today, you could see exactly why we've dipped and why at that time we had a pretty healthy rally. So if you look towards the end of April, we are hitting volumes of around 10 billion, 11 billion, 8 billion, 7 billion, 8 billion. And then you contrast that with what's going on today, and we're consistently at, almost half that. So we have 5 billion, 5 billion, 5 billion, 6 billion, 4 billion, 4 billion, 4 billion, 5 billion today. And this is the historical data on just BTC. I'm not talking about the overall market volume, just for BTC. So we do need to get to these levels again where we're consistently hitting 8, 9, 10, 11 billion in volume in order for a rally to sustain. And since we're here, let's just take a look at the overall market cap as well as some of the alts paired against BTC real quick. Overall market cap 323 bill, a little better than yesterday, about 10 billion more. Actually closer to around 15 billion more than yesterday. BTC dominance has increased to 39. We were at 36 just a couple of weeks ago. Looking at some of the alts, Cardano has regained what it had lost over the last week. Really, it wasn't much of a rally, just really regained what it had lost. EOS is stagnating. The one that everyone is focusing on is Tron because they're releasing their mainnet in a couple of days. Over the last week, it's had pretty abysmal performance, and that continues. Keep a close watch for the trade alerts, especially with some of these coins that are launching mainnets. The link is in the description in the Patreon. I will be sending out active trade alerts dynamically based on what the market gives us in terms of analysis. Things can shift very quickly in crypto, as you guys know, and trades can become active very quickly based on trends, volumes, trend patterns, etc. So keep an eye out for the trade alerts. Icon has had a nice 10% rally or so over the last day. So has 0x, so has Bitcoin, as well as Nano, which is, I mean, it's been, a sleeping giant for so long. Most of these we actually did send out trade alerts for. So again, keep an eye out for the trade alerts. A few others, R-Chain, WAN Chain, those have had some nice rallies over the last day. So there are a few alts moving independently of BTC as we've seen, but we would like the overall market cap to go up as well as the overall volume to go up and BTC dominance to decline. That is it for this video. Go ahead and check out the site where my portfolio is currently updated. You can get a live snapshot of my portfolio. We also have the merchandise section updated with the Traveling Crypto logo merch, as well as the ever requested Pablo coin merchandise that we talk about in the Discord all of the time. So go ahead and check that out. Also, subscribe to the channel, hit that notification bell, leave a comment, leave a thumbs up if you like this content. Join the Discord. It's 100% free. Join the Patreon for the trade alerts and the weekly report. Stay safe out there. Peace.